I don't know where your eyes are focusing at right now, but we're right here, okay? There's actually a line here that you can tell. If you see this order number here, and it says sell 0.5, okay? So there's an order that has been put in. The current price right now is what you see right here, and this is the line. You see the line back there, right? So I'm making a decision. It's a probability play. I'm taking a look here, and I'm saying to myself, you know, there's another way to make this look even simpler. Let's make this as simple as possible. See this line, this green line comes down, stops here. From there, notice what happens. Line comes down. Now again, notice the price point here, right? This line. So this line was crossed, it fell down, okay? Then think of it as a ball bouncing or something like that, right? So then, you know, the ball falls so fast, so high down, boom. All right, it's gonna bounce up. All right. Now, of course, clearly this is not a ball because this does not represent the true bounce of a ball under the force of gravity and all that. But I'm just using this as an example. Price comes down, so this line came down and then it shot up. Okay. Now you can see how it's respecting this line here, this red line actually. Okay. Just something to keep an eye on. Now it didn't come back as high as it did before it actually bounced again. Okay, you know that when you bounce a ball, you bounce it and then it, you know, it hits the ground, it comes up, but it never comes, you know, it's not coming way back up to where it came from before, all right? It's going to be a little less. Again, just an example to explain this, okay? This is not a ball, it's just an example. So it comes down and then we get a bounce up. You know, it almost like hits this line as a ceiling or as some type of resistance, and then it falls down again, comes up not as high as it was when it initially fell, but then it kind of bounces a little around, you know, around some more. Now, if we take this, let's just say this point right here, right? Because we definitely clearly see that there's a point here, and we can also see that there's another point as well, and it's a good idea to just kind of like line these up. Okay, so you see a point here, you see a point here, all right, you see a point here, right? So these different points right here represent, you know, high peaks, price peaks, okay? Now, when this price peaks, you know, again, it's not you know, 100% all the time, you know, because we clearly have a different peak here, right? But just taking a look at this one with the most touches, you know, that gives it more validity once there's more touches, you know, and I say touches, the peaks, you know, that's what we're looking at. And not just that, but the most recent is more valid than, say, you know, one that happened, you know, the one that happened previous, okay? So this is the most recent high right here. Although this was a high, right? But we only see one of these. But here it is. We see, you know, peak here. We see peak here, peak here. So these here, taking that in consideration, this is a great area that we would say, you know, you can call it resistance, right? Price goes up and it's resisted. You know, it's facing resistance. It can't go any higher. So what does it do? It goes down. Okay. Now you can see over, you know, quite some time here. We have, you know, this movement happening here, right? You can look at this as just one movement up, right? With a lot of little, you know, bounces in between, but it's still going, you know, in the general trend of up right here, right? So from this point here up to here, we can say that's an incline, right? So, taking that in consideration, we come up to this point again. Even though it took some time to get there, we ultimately end up going back down. Okay, going back down. Now again, did it go straight down? No, it actually went down. All right, and it came back up. Didn't make it as high as it did before, but it came back up and then started to bounce down. Okay, so we can take a look at this longer move here again from this peak and either this peak. All right, let's take this peak here. What did we do? We came in, we tried to come back up, but we end up going down. We tried to come back up, we end up going back down further, even further. Okay, so we can see that this here, the trend is going downward, even though it doesn't always continue to go down, right? But the overall trend here is down, clearly. Now, we're only going to go down but so far. Okay, we can do this all over again, right? We hit the bottom or an area of support. That's what it's called sometimes. This is like the floor, right? And then we start bouncing back up from here. Again, did we go straight up? Of course not, right? Nothing goes straight up. But you can actually see that this is a strong, move to the upside, all right? The trend is trending up. You can see how short this is, short period of time, because we're looking at time at the bottom. See how short period of time it took for this to get up. But you can see, also you can see that to get down there from where we are right now, it took some time, right? You can see that right there. So again, this rush up here into an area where it previously turned around, that's where we find ourselves at right now. Okay, that's where we find ourselves at right now. And although our entry price that we came in on we're above that right now. Right now we came in below this mark here to really participate in this. Okay, so if we were to take a look at the risk that we have right now, I would say if it goes back to this point right here, let's take a look. We're losing 50, about $50 right here, right? Okay, so let's just say, we expect that this may potentially rise back up to this point that it has risen to before, right? And we expect it to get to that point and actually turn around and come back down at that point. Okay, so what we find ourselves doing is selling high. Okay, we're selling at a high price, and we're gonna allow that to fall down here, and then we'll close it out and take the profits. That's exactly what we're doing. It's nothing. I'm making the educated guess, all right, based on probabilities, based on prior information. Now, does this have to fall down? No, it does not have to fall down. Okay, there's no guarantee that this is going to go return back to where it did before. That's not the game we play. The game that we're playing right here is a game of probability. It's a higher probability that because it reached this point before and fell down, it could not, it found this to be an area of resistance before in the past. We just going to say that, well, based on historical data, these previous, it could go above. And if it does, we see, if we zoom in, if this goes up to where it has before, this peak here, then we will be risking $100. Okay, stop loss right here, $100. Okay, this is where you say, all right, look, maybe I was wrong. Okay, now it can go right a little bit above this and then turn back around. All right, that's just the way the game works. We got strategies for that as well. But if you take a look at this, this is what we're risking. We're risking $100 right here. Okay, so right there, profit negative $100. That's 227 pips away All right, it should not get down, but if it does, we so ready for that. I'll put that on the table. Okay. Now, would it be wise to wait till it gets to this point and then get in? Of course. That's the lowest risk. Okay. Then you go here and then maybe you put your mark, up here. All right. So yeah, you're always gonna have, times where you can reduce your risk by just being patient, by waiting things out. All right. Yes, there could be a good play here, but you don't want to rush to get into it too early. Okay, let the market do what it's gonna do, and then you get in where you fit in. That's where we win. Yeah, I like that. So, one of the things that we can also take a look at is, there's a lot of different pieces of data here, but we can see back when it was at this point here. Okay, we can come on down and see where were we on the RSI. Now this is getting kind of technical, and this is just some of the things that I take in consideration when I'm doing this technical analysis. I may want to take a look and see what the value here. So 45 here. When it was there before, what were we looking at here? Okay, 55 here. Okay, I'm just curious. What was this one looking like? That was a peak too. 53. Okay. And just for the heck of it, because this is a peak, just because it's a peak, 51. Okay. And this is a peak too. I mean, it's lower, but I mean, it's still a peak. So RSI, relative strength, 51. Okay. So peaks, 50. All right, cool. So let's see, where were we when we made, because we made a previous peak here. Where was this at? 59. Okay, we really moving in high. 58. Okay, we so again, this is good data to take a look at, right? So we see where we were before. You were looking at different data points and kind of taking a look at it. We're in the same overbought situation we were before, okay, when price turned around. Now again, it doesn't have to happen just like it did before. Again, it's just a high probability play right here. All right. Now, we took a look at what's at risk, and it's always good to manage your risk, because that's how we stay in the game, and that's how we are profitable, by managing our risk. So we say, hey, look, if we're wrong, we're wrong. We cut those losses here, and we can always get back in. All right. So I risk $100 right here, and it depends on how long you want to stay in this, right? So the way that we look at this is we throw Fibonacci retracements here, and again, I'm using these lines. I don't typically use lines like this, the line chart, but just for simplicity, I would like to use this just to prove a point. It doesn't have to be complicated, okay? We're just visually taking a look at the charts, throwing some lines on there. Now, how these lines got here, these red lines, don't worry about that right now. But if you're thinking about that, then pay attention. Think about the ball bouncing back up, all right? Or think about the ball bouncing down, all right? Ball bouncing down, I want to know, how far is it going to come back up? Well, we have some interesting tools to kind of show us that. And the Fibonacci retracement tool will basically say, okay, here it is. It's shot up. Everything that goes up can't continues to go up. It's going to come down. Where would it come down to? Where would it retrace back to? Now, here I have some levels. Didn't take long to get to that point, right? Sometimes, the faster it go up, the faster it come back down too, all right? Pretty quickly. And then again, we're looking at this really zoomed in right now, but there's a lot more downside that you're not aware of here, but you see that on the higher time frames. See, this is just a down, just a smaller downtrend and a much larger downtrend. See, we're only dealing with just this little small piece, but there's a lot more going on when you zoom out. Okay, again, you want to make sure you're on the right side of the trend. Okay, overall, you can see this you know, almost play out again on the larger time frame, because now we're going back as far as 2017 looking at data, and it can show you that, you know, since 2017 again we've been in the downtrend. So again, we have time on our side. You understand what I'm saying? And we have the most immediate time. You know, we want to be in the same direction. We want to be in alignment. Okay, so we want to be in an area where we're going down on the smaller time frame immediately, you know, within the short time, and on a larger time frame we're also going down, so that we can actually take advantage of, you know, a much larger move, and then profit even more. So now here we're looking at about 600 bucks, 650 actually. Okay, so this is just something, again, I'm risking 100 bucks, right? Clearly, with the anticipation that, again, you know, if this doesn't work out, so be it. I can actually jump back in and go the other direction if I want to. You understand? Sometimes, you know, this stop loss right here will have right above it a buy order. Okay, you just jump in and go the other direction. Listen, we don't make up where the market go. I can't really, you know, I'm not a fortune teller. Whatever the market is gonna do, that's what it's gonna do. I'm here to make profits. So I wanted to kind of put that together for you real quick, just so you can kind of see, have something that you can kind of replay over and over, and kind of see for yourself why the decisions are being made. I think you'll have a lot more confidence in the signals that come your way. And when I say signals, I'm basically giving you so let's say new order. So what I'll do is I'll be providing you with but I'll give you the stop loss, everything that's here actually. In most cases, this will be a not a market execution, but a pending order. Okay, where I'll say, all right, here's your, you know, well, in this case, this is a sell, right? So we would make this a sell limit. So you make that a sell limit, and then you put in the price. So then you put the price in here, right? So we do a new order, pending, sell limit, 80, 400 is your sell limit, right? 5. And then stop loss, you have to come in here and change it from market execution to pending order, right? And then you're gonna have to decide which type it is. But this is all gonna be this is all a part of the signal information. Pending order, type, sell limit, buy stop, sell, buy stop, buy limit. That information is gonna be there. At what price? The price is gonna be put in there, right? You're gonna paste that in, and then you're gonna place. Just like that. It's just that simple. You can put your stop loss to take profit. Paste, copy, paste, copy, paste, copy, paste, place. Boom. And you wait patiently. That's what it is.